This week we're talking trade and we'll get into some risk protection. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is University of Kentucky's Kenny Burdine. Good afternoon and happy Friday.
Good afternoon, Meghan. Happy Friday to you.
Happy Mother's Day to the moms and the farm moms who are celebrating this weekend. We can't do a lot of what we do without them. Critical roles to farm families all over.
Absolutely.
All right. Now we're going to get into some of that data and talking about those things coming up. But first, let's recap another wild and crazy week in the markets. I think this is going to be my line from now until eternity, hopefully.
Let's hope so. So here we go again. 5 market average fed steer up sharply this week, 226.56 today for the end of this week. June live cattle futures gained 355 from last week. They settled today at 214.65. Choice box beef was up about $1.50, coming in today at 345.97. May feeder cattle futures were up 320 on the week, closing today at 298.15. And I got to pause and make this comment, Meghan. Of course, we're talking about May, it's the nearby, but you got to look at that August too. And August closed Thursday above $300 a hundredweight, was off a little bit today, but closed again under 300. So that's noteworthy that August was above 300 this week. That's certainly I think a first. I think I'm safe saying that it's a first. So.
Definitely it is. When you see, and I hate to interrupt you, but when you see a number like that on that contract or in that element of the futures contracts, did you ever really think that was a possibility, a real possibility?
I didn't really until the last week or two. And I remember thinking, we're going to test that level, and it looks like we have. You get those questions from time to time, is that a technical, number and all this and that. And I'm not really a technical trading type person, but, it's a big number. It's a round number. It certainly raises some eyebrows. And, you can see how there might be maybe some sell orders, put in place around that number. So there's merit in, knowing that we're right there. But fundamentally, there's no reason why that, that number is any more important than any other. Realistically, it just means it's a round number. We could see some trading, or some orders because of that. So definitely worth watching.
And we'll get into that a little bit more, too, when we talk about risk protection coming up. But I'll let you get back into what happened in the markets as we wrap up and talk hogs.
Yeah, absolutely. So not quite as much to talk about, but still an interesting week. National base hog carcass price up a little bit, I think about 50 cents on the week, 88.73 per hundredweight. Pork cutout values were up a little less than $1, 97.94. And then May lean hog futures were actually off a little bit, off about $2.60, but closed Friday at $90.35 per hundredweight.
When we see what's going on the hog side of things, I'm assuming a little bit of trade is coming into that, a little bit of concern about demand. But knowing that we're going into summer grilling season, we know that pork is a little bit more competitively priced in the retail space. Does that give some opportunity for some maybe some upward movement in the markets there?
Sure. And I think it's across species. But you mentioned pork. We're recording this. What is this? The second Friday of May. So, we're coming into that spring grilling season. Historically, we kind of think about Memorial Day as kind of being the start, if you will, although I've been grilling for a while now. But, you definitely have that seasonal element. This is definitely true on the hog side. Seasonally, we see hog prices kind of rally into this point, and they actually usually make their peak sometime late summer. So there's, I think, reason for optimism from a seasonal perspective on the hog market for sure.
All right, let's talk slaughter numbers for both cattle and hogs.
We can do it. So cattle slaughter was really unchanged from this week compared to last week. 559,000 head, run a little more than 6% lower than last year to date. So I'm kind of now looking at all the weeks we've got at this point. We're running below last year. Hog slaughter was up 2% from last week, doing a little rounding. I'm going to call it 2.49 million head. And that's down a little over 2% year to date. So hogs up a little bit year over year, or sorry, year to date, cattle down.
I feel like we're going in opposite directions, right? Cattle are slowing down, or that stretch is widening, and we're kind of at a pretty consistent level on the hog side of things.
Seems like it. Maybe some growth in numbers. And of course, the big story in both, but hogs for sure, is just productivity. Both pigs per litter and weights.
Monthly trade data is the big report out this week. There's two parts to this conversation, right? The export and the import elements. Let's start first when we take a look at the export side.
We'll talk exports. So, not numbers that jump off the page. So this is monthly data. So the most recent data is for March of 2025. So there's a little bit of lag here. Let's start by saying that. So just comparing March to March on the beef end, exports were really unchanged from March of 2024. If I look at it for the quarter, and I think it's good with data like this to take a little bit longer view sometimes, beef exports were down 2.7% for the quarter. I want to mention one in particular. China's gotten a lot of attention. Again, just comparing March of 2025 to March of 2024, beef exports to China were down 2% for the month, but up actually for the quarter. In other words, the first 3 months of this year versus the first 3 months of last year, exports to China were about 2% higher. And then if you want to talk pork exports too, they were actually higher, up 3% in March, but then down about 1% if I just think about quarter over quarter, Megan.
I think China is going to be interesting as we get into the next month. Two factors, right? We have the escalation in the tariffs. That's one element. China's also not renewed registrations for these facilities. So it's not just slaughter facilities, right? It's cold storage as well. So beef exports to China starting in April are at a standstill, right?
You would definitely expect a major change for April. And I think it's important. That's one reason why I want to mention that time lag is that, we're probably not capturing that with that March data. We should capture that with the April data. So we'll know a little bit more about that. But yeah, that's definitely something to watch as we think about roughly a month from now.
Do you even think maybe there was some posturing, like thinking about like these are happening, this conversation is escalating, maybe we're buying ahead to get ahead of the curve when we look at that 2% above on the quarter?
I think it makes sense. We see that from time to time, markets trying to get ahead of something. The example that I like to use, kind of the classic example, if you look kind of pre-COVID, kind of in the February, March time period, it appeared that we were really trying to pull cattle through the system to kind of get ahead of that. And you could absolutely see the same thing happening with some of these countries that might think that trade's going to be different soon. So you could absolutely see some of that in March.
So let's talk imports. Pork imports, not quite as shocking as when we take a look at those beef and veal imports.
Well, so we'll start with pork, and like you said, nothing super shocking there. Pork imports for the month over month, down 8%. And then if I use the first 3 months, down just under 6% for the quarter. Beef, like I said, another story. Just comparing March of 2025 to March of 2024, beef and veal imports 47% higher this year. If I use the quarterly approach, which I think tells a little different story, 3 months together, imports were 24% higher quarter over quarter. Both big numbers for sure. We're bringing in a whole lot more beef.
I think it's important to talk about how that the role that the import element plays in, if you don't mind, Kenny, thinking about one, our needs, and two, our ability to continue to be able to meet demand for consumers, which I, I think hamburgers, like my mind immediately goes to fast casual and having hamburgers available.
Sure, and a good, a large share of the beef that's consumed in this country is in ground form. You talk about burgers, but also burger is used in a lot of different dishes, right? That matter, tacos, chili, all those sorts of things. And I think that perspective is important because a lot of what we import absolutely is trim meat. So, for example, if you look at kind of the two traditional trading partners, Mexico and Canada, imports were up have been up from Mexico, down from Canada. And Canada probably is the country that has the most similar system to ours that we trade with. If you look at where a lot of the increases are from, and I think those are areas that we tend to bring in a lot of trim. So I think there's two comments I would make. The first would be just what you said, that absolutely we've got strong demand, for beef. Although we have increased, I shouldn't say increased, although we've offset some of the slaughter decreases with higher weights. Supply is certainly not growing. So, the fact that we're bringing in some speaks to demand. I want to mention one other thing. And 2 weeks ago, I think Josh was on the program last week, I think, but I guess 2 weeks ago for Cattle Market Notes Weekly, he wrote about slaughter weights and he wrote about basically higher quality grades as a result of that. And I just want to mention that just because I think that part of that may also be related to the fact that these weights are higher. Where our cattle are grading higher, which means there's more marble, which probably also means there's more fat trim. So that may mean there's more need for lean trim than to use for blending purposes. So I think both of those things are probably relevant when we think about what we're seeing with imports.
I have a very off the wall question, and I've been in Washington, D.C. all week, so I'm going to blame the conversations about the Make America Healthy Again that have been coming up consistently. As you see this push or this increase in use of beef tallow, whether it's for frying or beauty products, whatever you want to look at, does that potentially change our ability when we're talking about grinding and blending? Does that tighten those supplies eventually if this becomes widespread?
I think the answer is very possibly so. I can't say I'm an expert on that market by any means, and it's kind of it's a new market, or it's I should say this aspect of that market is new. But it's like a lot of things. We kind of think about beef as a commodity, but in reality, it's a collection of products, right? Whether that be cuts, byproducts, what have you. So the fact that there's potential for increased value for some of those products is only a positive when we think about what ultimately those cattle are worth in the marketplace.
It's definitely going to be interesting to watch this trade conversation move forward. While we're talking on trade, I think just high-level conversations, trade agreement in principle announced yesterday between the United States and the United Kingdom. Beef came up. Ethanol was one of the other areas, but beef also was asked and answered during the signing or during the announcement ceremony. One of the restrictions U.S. beef has had and going into the UK is raising practices, the use of growth promotants or growth hormones in our beef cattle. That doesn't appear to be changing. So how does that, what opportunity or how much opportunity is there for U.S. beef to increase and to capitalize on a high dollar, high value market?
Stands to be seen, of course. I guess if I just kind of step back and think about Great Britain as a potential market for beef and just kind of ignore any limitations in the beginning here. Fairly large country, not a huge producer of beef, and relatively speaking, pretty high income levels, right? So, to me, that speaks to potential that could be a good trading partner and a source for beef exports. You hit the nail on the head, though, right? The reason why we've historically not traded with them has been production practices, particularly growth promotants is, I think, the main one. So what that looks like, I don't know. Does that mean there's potential for them to relax some of that? Does that mean we're going to look at opportunities, to move some product into that market that have been, produced in a way that they're comfortable with? Either one of those is possible, I suppose. But to me, that's the question. And you also can't help but think, is whatever happens in Great Britain or the UK, does that in some way, does it, I don't want to say set the tone, but is there possible implications for the European Union, right? Because, similarly, we've not traded there for the same reason. So, the potential for a new market is almost always a positive, right? I just think in this case, there's just a lot of uncertainty about what it's going to look like and how much volume we're talking about, especially in the short run.
And to be clear, and for transparency purposes, we don't have I think the details of that deal are still being finalized. And I know the secretary is supposed to be in the UK on Monday to have those conversations. So we will see where that goes. But interesting conversations this week. And we'll see as the Trump administration continues to talk about more deals coming through as well. Okay. Big cattle prices, record levels. We've been having this conversation regularly. I feel like a broken record, but I think this may also sound like a broken record protecting your bottom line. But there's some changes coming to LRP for the 2026 reinsurance year. What are some things that producers need to think about, especially as we're looking at prices levels where we are currently?
So before we get into the changes, I guess we'll just kind of start by saying, and we talk about risk protection a lot, and I talk about LRP myself a lot because a lot of folks I work with, that's what they tend to gravitate towards. We're not a big contracting area, so LRP tends to get used more than probably anything. And just utilizing something, LRP being one potential strategy to capitalize on these prices, I think has merit, period, right? To cover your downside and protect yourself or protect some of this or keep some of this market run up. So that's kind of the big picture. LRP's kind of been an evolving insurance product, I guess I would say. I'm pretty sure, Meghan, it first became available in Kentucky in 2007, although I could be mistaken. But it's become much more attractive recently for several reasons, and it kind of continues to evolve over time. So there were four, I think, very significant things that are going to change with the new reinsurance year, which really means any policy effective after July 1 of 2025 is what that really means. So I'll just kind of hit these high level. And just for clarity, there were some other changes that matter, deadlines, dates that I'm not going to talk about. And then there's some details about paperwork requirements that I'm also not going to get into. We're just going to kind of stay high level and talk about, what's changed, what should you know about, and the typical qualifier, talk to an insurance person to kind of get the specifics. But the first one, this has been talked about for a while, is that forward contracted cattle can now be covered prior to possession. So previously, you had to physically have possession of the cattle to cover them with LRP. Now, potentially, they can be covered as soon as you bear price risk for them. So that's an interesting thing, because if I forward price cattle to be delivered to me a month or two down the road, I can go ahead and protect myself for their eventual value as either fat cattle or feeder cattle. That is significant, and that is a change worth talking about. There's two new categories that have been added. Type, I guess, is the word that they use, not category, but types for coverage. So one is cull dairy cows. So dairy cows that are going to be culled enter the beef system. The other one, though, this is a little bit confusing, is unborn calves. And of course, we've been able to cover unborn bulls and heifers for a while, but this category is really for calves that are going to be sold at a couple weeks of age, which is not common practice in the beef sector. It really kind of speaks to beef on dairy, right? And you can cover beef calves, you can cover beef on dairy calves, but realistically, we're talking about beef on dairy calves. So I think the weight range on this is 59 pounds to 100 pounds, less than a month of age. So this is really designed for, I think, beef on dairy cattle, those dairy operations that do tend to move those calves at a pretty young age. The third change I'll mention is they've added a drought hardship exemption. So if drought worsens in the area that you have the cattle covered from the effective date, well, I should say after the effective date, and you need to sell those cattle sooner, if it worsens enough, then you can actually move those cattle more than 60 days before the ending date and still keep the insurance in place. So that's always been something that's been a concern with some people. But if drought worsens enough, and there's an index used to measure that, then you actually can get around that 60-day rule. And then the last thing I'll just mention, really high level, really briefly, there is language now added that specifically prohibits subsidy capture. I don't know how much of this went on, but there was some discussion about LRP and impact on the market, and folks trying to harvest subsidy by combining an LRP contract, with something in the futures market. So it's specifically prohibited now. Both the insured and the agent will certify that they have not done and or have not advised the insured to do that. And then there are some things that are kind of presumed to be subsidy capture, but they're very specific. So for example, if I buy LRP on a given day, and then at the same time I write a put option at roughly the same time period that expires at roughly the same time as any date on my policy, then that kind of presumes subsidy capture. So they're very specific. So for most folks, it's not going to matter. You can still use your main strategy, but just be aware that that is something that you'll actually certify if you purchase a policy that becomes effective after July 1 of this year, Meghan.
As always, contact your local your crop insurance provider for all of the details. How many conversations are you having with producers right now about making sure that they're not, and we're not talking hitting home runs and triples every single time, right? But they're not leaving significant dollars on the table, and they're able to mitigate risk during a time when volatility could get like two wild and crazy guys.
So I'm definitely having those, phone calls. I will say this, our traditional extension meeting season, when I'm out face to face with farmers, actually runs through about the 1st of April. So I'm not on the road as much this time of year because everybody's too busy to come listen to me, right? So there's kind of the first piece. So the conversations I have are more driven by the programming. So now it's phone calls that folks are running into. I'll make two comments. Number one, there absolutely are some people that are concerned, and they should be. But it's almost driven more by what they paid for calves this spring for stocker operator, right? That's kind of the sticker shock of it, right? And then I think just realizing how strong prices are and what they want to do to cover. So that's kind of the first thing. I've said this before, but ironically, Meghan, I get more questions about risk management when the market pulls back significantly than I do in a time like this, which I think is unfortunate. There's a lot of optimism right now, which understandably so, I'm optimistic too, right? But I think being realistic is also important. And these markets are giving us an opportunity here that we don't want to let get away.
Supply and demand numbers come out next week. Anything that you're watching specifically as you think about whether it's inputs, so feed cost, or if it's about beef production and costs, where those are headed, and pork as well?
Yeah, the things you mentioned for sure. The feed cost element matters, and I immediately go to weights, right? There's, we've got these high values. That's a big piece of why these weights are being pushed as high as they are. Feed cost comes into play there and how that shakes out with beef production. Slaughter numbers are down more than I would have guessed, year to date. So how much of that we can offset with weights to me is a really key question. So I'm going to be looking at that. And you mentioned pork. I'll even mention poultry for that matter. But I think what the three main meats that we eat, what their production levels look like this year is really going to matter. Demand's been awfully strong, right? I think we know supplies are going to be tight. It's just a question of how tight and how strong is that demand.
Kenny, great to see you.
You too. Thanks for having me again.
All right. So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments, or if you're watching this on social media channels, make sure to reach out if you have questions and you want those answered as well. And for market updates twice daily, make sure to check out the Market Minute on Brownfield. I'm Meghan Grebner for Brownfield.